Welcome back, traders. My name is Adam from BCR, here with your daily market analysis for the 6th of March 2025. If you are having trouble understanding the current market conditions and the different factors influencing your trades, such as the recent outrage between President Trump and Zelensky, then this video is for you. I'll be covering fundamental and technical factors influencing the dollar index, Euro USD, and gold. Let's waste no time and jump into the charts. Early this week, the dollar index fell below 105, reaching a low of 104.25 as European currencies rebounded on the prospect of major physical stimulus. European leaders only react in crisis, and the prospect of the United States withdrawing its security umbrella over Europe is undoubtedly a crisis. Market sentiment was affected by the US tariff policy on Canada and Mexico. Previously, the market has suspected that US President Trump might grant an extension before the deadline, but the United States finally implemented and established tariff policies as scheduled, triggering a chain reaction in international markets. So, recent US economic data suggests that the US economy may be entering a phase of slow or even negative growth, while US yields and the dollar are weakening, while inflation caused by tariff remains high. Although the United States has now expanded its tariff policy to Canada and Mexico, weak domestic economic activity in the United States has led the market to expect the Federal Reserve to cut interest rates by 75 basis points this year, instead of the original 50 basis points. This has prevented the dollar from strengthening on the tariff news. So if we take a look at the chart, we can see that we have support at the 104 level, which is the 14-day simple moving average, we also have Wednesday's lows at 104 and 25 and 103.34 marked as the 6th of November low. If the previous two are breached, expect price to head down there. We have resistance at the psychological level of 105 and 105.04, which is the strong 200-day simple moving average resistance. If those are broken, we are looking at 105.77 level, which is Wednesday's high. Euro USD has extended its impressive weekly rebound, hovering slightly below the 1.08 or multi-month highs on the backdrop of general optimism in the risk complex and clear pullback in the US dollar. On Wednesday, Euro USD extended the previous day's strong upward trend during European trading hours, reaching around the 1.075 level, the highest level so far this year. Major currency pairs strengthened as investors sold the US dollar amid growing concerns about the US economic outlook. The US dollar index fell to a more than 3 month low below 105. A series of events changed market participants' views on US President Trump tariff agenda. Investors expect Trump's tariff to slow US economic growth rather than benefiting growth and inflation as they had earlier predicted. In the short term, policy divergence with the Federal Reserve and geopolitical risks may keep the euro under continued downward pressure. Investors need to pay close attention to the ECB's policy moves, economic data, and changes in risk sentiment in global markets. In the middle of the week, the euro recorded its best single day performance in more than 2 years, reaching a high of 1.0796, bringing its bull market gains this week to an impressive more than 3%. Euro USD broke through the 1.07 mark for the first time since December last year and is expected to reach a new 5 month high amid continued buying by the bulls. Significant technical resistance is emerging at 1.08, which is a psychological level, and 1.0817, which is the 61.8% Fibonacci retracement golden zone level. If breached, the next target is at 1.09. However, technical oscillators indicate overbought conditions, suggesting that buyers may lose momentum, leading to bearish pressure. So we also have key supports if price goes to the downside at 1.0751, which is the 300-day moving average. We have 1.07 as a psychological barrier and 1.0695, which is the 50% Fibonacci retracement zone. If these supports fail, expect further downside. Now on to our favorite pair, gold. On Wednesday, gold shook off its initial decline and rose slightly, returning to the range of 2,920 after the US ISM Service Purchasing Managers Index showed a rebound in service inflation and employment in February. Against the backdrop of escalating trade conflicts after US President Trump imposed new tariffs, the dollar weakened to a near 3 month low. An increased safe haven demand pushed gold prices higher, reaching an intraday high of 2,930, making two consecutive trading days of gains. As gold prices approach historical highs, the risk of a sharp correction is increasing. Technically, the gold price trend looks similar to the peak in 2011, when the gold price hit a historical high above 1,900 and then fell sharply, remaining in a slump until 2018. She said that when gold peaked in 2011, it's corrected to 45%. Although gold has attracted safe haven buying as stock falls, investors should proceed with caution. The risk is that investors may sell gold to raise cash to cover their stock losses and generate capital. In an environment of heightened economic uncertainty, it is expected that the US Treasuries and cash will be safe haven assets that investors turn to. Gold prices extended Monday's gains and the start of this week's trading session. The range of intraday pivot levels has become tighter, confirming the current hesitation of investors after last week's decline. So gold is actually finding support at the 2,889 level, which is the 25-day moving average, and 2,900 level, which is a psychological zone. So which is pushing price higher. If momentum continues, resistance levels to watch are the 2,930, which is Wednesday's high, and there's also the 2,934, which is the intermediate resistance, and 2,956, which is all-time high from February 24. Key support levels are at 28.89, which, as I said, is a 25-day moving average, 28.82, which is Tuesday's lows, and 28.50, which is the 34-day moving average. As you all know, if these supports don't hold, expect price to drop further. I would like to thank you all for joining me on today's daily market analysis and actually making it this far through the video. I would like to ask you guys to subscribe, leave a like, and a comment down below of different pairs you would like me to analyze through fundamental and technical analysis. Now, stay sharp, manage your risk, and I'll see you in the next market update. Happy trading.